David Lubin, Head Emerging Market Economics at Citi, joins in from London. David, hi, morning. Post the interim budget, with the current account deficit now seen at $45 billion, which is close to 2.2% of the GDP versus the 4.8% last year, the FM has stated that India has averted a ratings downgrade. Do you agree with that?
For the time being, yes, that's possibly true. But I think in general terms, if you go back over the last 10 years, there have been two fundamental pillars on which emerging economies have built their improvement in creditworthiness. One was stable and improving debt-GDP ratios, and the other was the accumulation of foreign exchange reserves. I mean, in India's case, we've seen reserves go from around $50 billion to $290 billion over the last 10 years. Even if debt-GDP ratios can be stabilized through disciplined fiscal policy, there is, I think, still going to be some pressure on reserves accumulation. In other words, I don't think the next 10 years will see, or the next few years, we'll see such favorable environment for reserves accumulation in emerging economies as we've seen in the last 10 years. The environment for capital flows is more hostile. The external demand environment supporting export growth is more hostile. And so I think, in general, emerging markets' creditworthiness will, at the margin, come under some downward pressure over the next few years. That's not to say anything specific with India in the short run, but I think it will become more difficult for emerging economies in general to sustain the improvement in creditworthiness that they've enjoyed in the last 10 years.
David, on both these variables, debt and GDP and forex reserves, do you believe that India has done much better than other emerging markets?
Yes, absolutely. I mean, what India demonstrated over the course of the second half of calendar 2013, more than anything else, was quite a dramatic adjustment in the current account deficit. And since the current account deficit is so central in the way the market assesses vulnerability across emerging economies, the squeeze in the current account deficit is phenomenal. Now, of course, a lot of that deficit reduction in India's case was achieved through compression of gold imports. But the good news is that India, of the fragile five economies, India, Indonesia, Brazil, South Africa, Turkey, India was unique in its ability to demonstrate an acceleration of export growth. And the dynamism of Indian exports is, I think, a kind of very important very important source of confidence for India right now. And I think that, if that's going to be sustained, that'll be very good news indeed. Partly because it'll be difficult, I suppose, to keep the squeeze on gold imports for a very long time.
So you foresee a 5.5% growth for FY15 because the finance minister has indicated the 6% plus. How much of this will be export-led given the currency fall, and how much will be due to a revival in the domestic growth?
Well, I think although Indian export growth has been very decisive and very apparent and helped to shrink the current account deficit, India remains a relatively closed economy, and so strong export growth is not necessarily going to deliver fantastic news for GDP growth overall. And I think there's still, although Indian export growth has accelerated in the last few months, until December at least, there's still a serious question mark about the robustness of the external demand environment that emerging economies face. Growth in the Eurozone is weak, growth in the US is okay, but it seems that US growth is not particularly friendly, at the moment at least, towards emerging economies, in the sense that the growth that we're seeing in the US is not producing a huge increase in import demand. And so there's still a number of questions around the external environment. And I think in general, the sources of growth in emerging economies will have to become more homegrown over the next few years. And what that means in turn is that growth is going to rely much more heavily on a kind of decisive implementation of structural reforms. And of course, on that question, we have to wait and see until the outcome of the election and what kind of government is formed in India and whether it's able to deliver that kind of structural reform agenda.
Okay, good chatting with you. Really appreciate you taking the time out and speaking with us.